Welcome to Making Money. This is Matt McCall. It's a special edition, a short one and sweet. We're going to get right to it. The Fed and Chairman Powell came out today and raised interest rates by 50 basis points. It's the first time we had a raise that high since 2000, folks. That was during the tech bubble. I remember that. I was at Charles Schwab. I was a stockbroker right out of college. And now 22 years later, we're here again. So I'm going to talk real quick in the next couple of minutes about what this means for your portfolio, stocks, bonds, gold, Bitcoin, you name it. Also, going to talk about a few of the little nuggets that came out of his press conference here today. So let's dive right into it. As I mentioned, the Fed has raised interest rates 50 basis points. It's now in a range from 0.75 to 1%. So 75 basis points to 1% is where we sit right now at the Fed funds rate. The other big number that came out was that they're going to eventually, the Fed that is, start to reduce their bond holdings. Starting on June 1st, they're going to start letting the maturing bonds expire. But in the next 3 months after that, they're going to cap that at $95 billion. So they're reducing that balance sheet by $95 billion per month. Everything we heard today, the 50 basis point increase, the fact that they're going to start reducing the balance sheet, is pretty much been telegraphed, folks. We really kind of knew this was going to happen. And I was saying to myself today, I snuck off to the gym at lunchtime, and I thought about buying into some stocks, maybe just into the S&P 500 or the NASDAQ. And my thought process was, well, as long as it's not 75 basis points, we should be good, or something else happens. Because the market pulling back over the last couple of days, the last couple of months, has been pricing in this exact day, pricing in this happening again in June. I didn't do that because I never trust what the market's going to do after the Fed speaks. But let me talk a little bit about what Chairman Powell said early on in his press conference. He came out and said that they're not actively considering a rate increase of 75 basis points. Let me show you here on the chart. I'm going to pull up the S&P 500 here really quick, and I want to show you intraday when this happened. Right about here. This is a minute chart. You see this? That is right where he mentioned they're not considering 75 basis points. Again, I've been saying this for quite some time now, that the market's pricing in the 50 basis point hike. And the only thing that was really going to throw things for a loop was 75. I spoke with my team today, and they're concerned about a recession. They said, everybody's talking about a recession. Goldman Sachs, Merrill Lynch, you name it. And they are. But what I have to tell you folks is, when we get to the point where everybody's talking about the recession, maybe we do have one. But keep in mind, the NASDAQ already pulled back into bear market territory. Why did it pull back in bull market territory? Because it was anticipating a potential recession. It was anticipating inflation being high. It was anticipating the Fed raising interest rates aggressively. We know the Fed's doing that. We know inflation's high. If we don't get a recession, that's a huge pop to stocks. Even if we get a recession, it's probably going to be very, very light. And in that situation, again, it is priced into the stock market. We need to keep that in mind. So a few other things that really kind of hit me here today was the year end now, the market's looking for the Fed funds rate to be between 3 and 3.25%. So that tells us there's going to be another 225 basis points of hikes, another 2.25%. 50 basis points in June is basically baked in the cake. And as I mentioned, Powell came out and said they're not actively considering 75 basis points. So I don't think we will see that at any meeting unless something changes and the market rallies and the economy takes off from where it is today, which I don't see that happening. Or inflation boosts from here, which I don't see that happening. As far as inflation, core PCE, he believes, is peaking. Again, I really don't care what they say as far as taking it to heart. I care what they say because I want to see how the market reacts. But the market's lost a lot of faith in Powell and the Fed. But I agree with him on this. I think we are seeing the inflation peak right here. I think we're going to see prices start coming down. We had the war in Ukraine really kind of at its height, and that sent prices of food and wheat and all kinds of other things. It's the breadbasket of the world over there. That sent prices higher. It sent energy prices higher. A lot of these prices have come down quite a bit from their spike highs that we saw. So I think we're going to see inflation start coming down. Plus, with the active Fed coming out, we should start seeing a top in that. A lot of people out there have been planning for what we call a hard landing, meaning that the Fed's going to raise rates and we're going to see the economy really fall apart. Again, Powell came out and said that there is a good chance of a soft landing. Yellen came out and said this. Again, not taking what they're saying, But again, I happen to agree with him. And it's not that I always agree with the Fed. A lot of times I disagree. I think they should have been more aggressive a lot earlier. But I will say this. I do think that we will see a softer landing than what the market is pricing in. And that's all that matters. If it's softer than what the market's pricing in, that is a catalyst for stocks, folks. That's a very, very good thing. So again, the next meeting is going to be in June. We have inflation, I think, that's going to be peaking. I think we're going to probably see a soft landing. Kind of outside of this, though, the last reading that came out last week from the AAII, American Association of Individual Investors, the spread between the bulls and bears, meaning there's a lot more bears than bulls right now, hit that lowest level. I should say bulls versus bears. That number hit the lowest level, which is bears. The lowest level since 2008, 2009, and going all the way back to 2000. Two of the greatest buying opportunities in this generation. And we're now there again. That's how negative people are. And as a contrarian, which you should be in the market, as I am, that tells me we're very close to a sweet spot. When I spoke to my team today, I said, I don't know if this is the bottom. I don't know if we're going to have a recession. But I'll tell you this, there's so many indicators pointing right now to this being a bit of a sweet spot. Could we have a quick sell-off of 5 to 10% in NASDAQ before we bottom? We could. That wouldn't surprise me that much. Again, but we're in a sweet spot, especially when it comes to individual stocks. This is a stock picker's market right here. We need to start looking at strong stocks. We need to start looking at mega trends that will be around. So speaking of that, let's take a look at what stocks are doing, because this is really important. And again, here's the chart I'm going to pull up here of the S&P 500 near the height of session, up about 1.7%. Let's take a look at the Qs, the NASDAQ 100. Again, near the height of session, up about 1.9%. Let's take a look at the ARK investment fund, because that's going to be a little more aggressive. Look at this spike. This was underperforming all day, now up 2.4%. And let's take a look at the daily chart. It looks like we could be forming a bottom. Again, I'm not calling a bottom. I'm not in the business of trying to pick bottoms. But what I will tell you is it's starting to feel that way. And I'm going to take a look over here. What I have over here are sectors. Leading the charge right here is oil. Energy stocks are up 2.8% today. We also have the telecommunications sector is up today. Now let's see what's lagging down at the bottom here. Healthcare. That surprised me. Pharmaceuticals are lagging. That being said, we had some news out with some of the COVID manufacturers could be hitting that. So that could be a kind of a one-off there. Gold. Everybody wants to know what's going on in gold, right? Let's take a look at GLD, the gold. That has actually spiked here in the last little bit as well. And we now have the gold ETF up 1.1%, but lagging stocks. But you can see the spike at the same time that stocks started spiking as well. Now let's take a look at the yield, because the Fed just raised rates, right? We all know that. And right now we have the yield on a 10-year sitting at 2.98%. And if we look at intraday, what it has done here intraday, it spiked a little bit, but now it's pulling back. So it's not really moving too much today. Again, you would think when the Fed's raising rates by 50 basis points, the biggest one-day raise in over 20 years, it basically telegraphing 50 more in June and probably over 200 basis points, if not more, by the end of the year, that we'd see this spiking today. But again, let me go back to this chart, folks. This has been priced in. We have run up from last August from 1.2%, 1.1% to 3% nearly. We have priced in a lot of this. So this is the opposite of a lot of times what happens when it's buy the rumor, sell the news. People are buying the stocks on the good potential good news, good potential news. The news hits and the stock sells off. People have been buying into it and they sell into the news. This is the exact opposite. We've been selling into what's going to happen, and it's happened exactly as the markets predicted. So to me, this is the start of a bottom. It's start of that sweet spot. Again, I'm not calling the bottom, but I think we are very, very close to one right here. And it's something that we cannot ignore. One other thing I want to take a look at is obviously Bitcoin. You know, I talk about Bitcoin a lot. Bitcoin, same thing, has spiked on the news. It was down around 38,700 before the news. Now it's around 39,700. So it's gone up about 1,000 points since then, hanging right around that $40,000 level. And one thing on Bitcoin, people keep saying it's so volatile. For the most part, folks, Bitcoin over the last couple of weeks has been in a very tight range, believe it or not. We've been between about 38,000 and 42,000 without a couple spikes. So it's actually been somewhat, in my opinion, less volatile than the stock market has been. So again, Bitcoin should move up on this, and we are seeing it move. We're seeing gold move up on it. We're seeing stocks move on it. We're seeing yields kind of hang steady again because this is priced in. You know, I could go on talking about this forever, but what I really want to get across to you is you're going to see these headlines and they're going to probably spook you because they're going to talk about more interest rate hikes. But again, big picture, we're probably near the peak when it comes to inflation. We've priced in the worst case scenario, a very hard landing, in my opinion. And the Fed raised 50 today. It's going to raise 50 again in June, almost guaranteed. They said 75 is not on the table. That takes away that fear of that happening. We still have unemployment near historical lows. We still have about 15 million job openings. We have wages increasing. Yes, prices are increasing at the grocery store, but wages are increasing as well. There's still a lot of good things going on there right now. This isn't like 2000 when we got this huge bubble. We still have consumers sitting on a ton of cash. We still have corporations sitting on more cash than they've ever sat on. So you have a bit of a buffer. So again, I am now aggressively looking to buy stocks in the next, let's say, 2 to 4 months, or 2 weeks to 2 months, I should say, 2 weeks to 2 months. In this time frame, in this sweet spot, I'm going to be nibbling on all pullbacks in companies that I love for the next 5 to 10 years that have mega trends behind them. Because to me, we learned a lot today. We learned what the Fed is going to do. We kind of knew it, but they said it today. 50 basis points is probably what we're going to see for the next couple of meetings, and it's been telegraphed out there, folks. We start seeing inflation come down, that's going to be a great thing. So again, right now, taking a look at what stocks are doing, it's one-day reaction. I don't care about one day, but trading near the highs of the day. The S&P is up about 1.7% right now, and we got about a little bit of less than an hour until the market closes. So again, stay positive and think about what's really going on behind these headlines. I'm going to be here for you. Another full podcast for you coming to you live tomorrow, Thursday, and we'll delve into these numbers even more after I analyze Powell's press conference. Thank you so much for joining in. I hope this helps clear things up a bit. I'll see you tomorrow, Thursday, regularly scheduled hour. This is Matt McCall, and that's been Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.